I'm Edward Warfield. I'm the publisher of CityBiz, and I'm honored today to interview Anders Jones, the CEO of Facet Wealth. Welcome, Anders.
Edwin, thank you. It's great to be here.
Your career included stints as a venture partner at Argyle's Ventures, and you did some business development at LiveRamp. Can you provide an overview of your career prior to the decision to launch Facet Wealth?
Absolutely. I graduated from college in 2009, which, with the exception of 2020, was probably the worst year to graduate in recent history. And I was fortunate enough to go to Stanford. So I was already out in Silicon Valley, no jobs to be had. What does one do but join a startup? So I joined the early team of the company that would eventually become LiveRamp, which is now a public company listed on the NASDAQ, $5 billion market cap. So was the eighth employee there and was fortunate to be there through a lot of ups and downs and going sideways, but had a good outcome. LiveRamp sold to Axiom in 2014, and then was subsequently spun out as a public company. So I got my first taste of the startup life right out of school, and really understood that a career in startups and understanding the startup life cycle is a bit of a different animal than going to a big company and having a sort of steadier, more certain career track. So after LiveRamp, I left in towards the end of 2013. After LiveRamp, I was doing some early stage investing. So Argyle's the entity that my investing partner and I invest out of, and we were really interested in investing outside of Silicon Valley. So even though we were both living in San Francisco at that point, we had this thesis that tech and innovation was everywhere, talent was everywhere. So we started looking at companies all over the U.S., actually some out of the U.S. too, but did deals around the country and ended up spending a fair amount of time in Baltimore. There were three businesses that we invested in, three companies that we invested in there. And then when the time came and we started Facet and I decided to get back to operating, we actually said, okay, what's the best city in the country to start a fintech company? Let's put a purely sort of first principles objective lens on it. And Baltimore really rose to the top. And so moved there in 2015 to start Facet.
So you know some of the history of Alex Brown and the history. There's an illustrious history, as we all know. Anyone from Baltimore, from T. Rowe Price and Legg Mason, but even going back to the 19th century. So I was curious about why you started it here. Tell us a little bit about the vision for Facet Wealth and the sort of next generation financial life management, and how are you different from other RIAs and financial planners?
Absolutely. So Facet provides personalized and unbiased financial advice that integrates into every facet of life. And we do it at a subscription price. So we really exist to service folks that have too much nuance and complexity in their financial lives for a purely digital solution like a robo advisor or an online solution, but they don't have the asset level to be attractive to a traditional financial advisor. So it's a huge market. It's about 38 million households in the U.S. And a lot of these folks have some wealth or some assets. It could be tied up in their primary residence or in their 401k, but the traditional industry can't really service them or do a good job servicing them. But with a different business model and a different approach to financial planning, which we take, we really can. So each one of our clients works with a dedicated certified financial planner. That's the sort of highest level of certification in the industry. We look at everything that your money touches in your life. So most people think of financial advice as someone's going to manage your money for you, and we'll certainly do that. It's not a requirement to work with us. We only manage money for about 50% of our clients, but we really look at everything. So things like cash flow, what's dollars in, dollars out on a monthly basis. Debt management. You might have some student debt. Are you paying the right interest rate or the best interest rate? How are you thinking about saving for your kids' college? We go as big or as little as you want to save for a beach vacation next year. How can we help you achieve that goal? We really think that there's a different approach to financial advice, which is thinking about your money and your happiness today as well as the longer term view of making sure that you're safe and protected in the long run. We charge an annual subscription, so unlike the majority of financial advisors, we charge people based on the work that we're doing for them and the help that they need. So when a client signs up with us, it's very clear. Here's what they're paying. Here's what they're getting for it, and it's totally transparent and unconflicted. So we never try and make money on a product or a commission or anything like that. And so, we find that that's one of the biggest selling points for our clients is they know that they're getting a completely unconflicted and transparent experience. So that's Facet in a nutshell. We started the company about 5 years ago, and we've grown pretty substantially with thousands of clients in all 50 states. One interesting fact is that 75% of our clients are new to financial services. So these aren't people that have already said, hey, I'm working with a financial advisor. I think Facet's a better choice. It's more people who said, I didn't know that I could afford to work with a financial advisor. I didn't know that I qualified, or the most heartbreaking one is that I deserve to work with a financial advisor. And so for us, that's that's a great indication that there's a huge market out there that's just wildly underserved.
And are you approaching them individually, or are you approaching them, as I was doing my homework, through? I was trying to understand whether is this sort of a corporate benefit, or are you really targeting both?
So our primary business is a very robust direct to consumer business. So we work with folks that typically, our target client is a young family. So kids anywhere, sort of under the age of 16. And, from an asset standpoint, they can be all over the map. From an age standpoint, it can be anyone from, late 20s to early 50s. But the thing that they all have in common is that they go through a series of pretty specific financial life events as you start a family and have kids, saving for, starting a 529 plan, or maybe even as sort of mundane as remodeling the guest room into a nursery. And so we really start interacting with prospective clients as they're typically researching topics around these life events. And then they come through an onboarding flow with us where we talk to them about, okay, sounds like you've got a kid on the way. Here are a few things that you probably need to think about. Here are some things that you're probably worried about. Here's some things that you probably aren't even thinking about. And then, we kind of put together a full end-to-end client experience tied to those life events. So that's our sort of direct to consumer growth engine, and we've grown really quickly in the last couple of years. We've 4x'd that business last year, and we'll 3x it again this year. So there's a huge demand there. On the employer side, we're just starting there. There's a huge shift in the mindset of HR and corporate benefits departments, where they understand that financial wellness is a huge driver of employee productivity. And so there are a number of companies that are trying to understand what the right solution is there. We think that it's matching up employees with experts who can help think through the benefit stack or the broader picture of their financial landscape. And we have some early companies that we've partnered with there that I'm really excited to see where that goes. But I think that's in the coming years, that will be a huge piece of our business going forward.
And can you give us a snapshot of where Facet is today in terms of financial planners, assets under management, clients, and any other key metrics you wish to share with us?
Sure. So, we have over 7,000 clients today. So, like I said, we're thousands of clients in all 50 states. We've got about 250 employees. We're actually spread out across 42 different states. We started the company in Baltimore, and headquarters has been there. But starting in 2016, we decided to be virtual first. So we're hiring CFPs all over the country. We have clients all over the country. And we just think that the virtual service model is the way of the future. So when the pandemic hit, we closed our office on a Thursday. Friday morning was business as usual. And I think that put us sort of ahead of the curve of a lot of companies that were playing catch up. In terms of AUM, it's not something that we track that closely. I think we're around 700 million in AUM. But for us, that's not a core part of our value prop. We're really focused on the financial planning. And if it makes sense for a client to manage money with us, we're happy to do it. We actually don't charge a fee for it, so we do it for free. But it's not sort of core to who we are. As a company, we've raised just over $60 million. Warburg Pincus is our primary investor. They did both our Series A and our Series B. They've been a great partner to work with. We will likely do a Series C at some point this year, and then we'll see where we go. But there's a huge opportunity, and I think we're all very excited to build a long-lasting and generational company in the space.
And let's talk about you. So you started the company back and launched it in 2016. Can you give us some sort of key milestones from 2016 up to last year?
In my mind, when I think about milestones, it comes down to um, really our ability to do a good job for the client. So when we first started the company, we said, okay, the most important thing is that we can take one client and provide an amazing service for them. So they say, wow, this is a really different thing than what I expected when I went to work with a financial advisor. And so I have a co-founder, Brent Weiss, who's from Baltimore. He was he is a CFP. He was a partner at a local wealth management firm, and he left and joined full time as a co-founder and really designed that initial experience. And certainly our client experience has evolved since then, but putting a stake in the ground and saying this is what excellence looks like, I think was probably the most important thing. The next piece for us was really around our service model. And so our whole innovation is we looked at how a financial advisor works today, a traditional advisor in the industry. They work with about 75 clients, and they're actually doing about 3 hours of prep time for every hour of client facing time that they spend. So they're only spending about 25% of their time, if even, working with clients, which I would argue is the highest and best use of a financial advisor. So what we did is we built a bunch of technology that took that 3 hours and got it as close to zero as we possibly could, so we could maximize the client facing time and thereby increase the number of clients that our planners can work with. And so I'd say the next big milestone was really proving out that our cost advantage and our ability to deliver a higher quality service at a much lower cost than the industry works. And so that's been something that we've been working on, but we now have planners that are sort of, quote unquote, fully loaded and are showing that yes, this is achievable at scale. So that was another big milestone for us. So it was really an amazing client experience, and then being able to service them at cost, and that's where we are. So now we've kind of proven the model, and it's really just a scaling game for us at this point.
Let's talk a bit about the competitive landscape. There's Betterment and there's Wealthfront out there. What's the competitive landscape look like, and how are you positioned?
The way that I think about it is that there are a lot of companies that are doing bits and pieces of what we do, but no one has really put it all together. And the reality is there's a pretty big innovator's dilemma with a lot of the large incumbents like the Vanguards, the Fidelities, the Schwabs of the world, because they've built their whole business on AUM based financial planning fees. And so, in order for them to switch and say, okay, we actually want to align ourselves totally with the client and do a subscription based or essentially cost plus model, they'd have to cannibalize their entire business, which I don't see that happening anytime soon. So as I look at the landscape, there are some companies that do a great job with financial planning. I'd put Edelman Financial Engines in that bucket. They have a mass affluent focus. They're incredibly expensive. So for one of our clients to go and work with them, it probably costs somewhere between, I don't know, $8,000 to $10,000 a year. The average client that we have pays $2,500 a year. So it's a big difference in cost. Vanguard is very aligned. We're very aligned with them in terms of the low cost approach. You don't really get real financial planning with them. You have a call center you can call into, you can get some asset allocation, but you don't get like true financial planning. Some of the startups like, Personal Capital is a great example. I would say they're probably the closest to us from a sort of fintech standpoint. They have dedicated CFPs. They do financial planning. They have a big asset minimum. So I think you have to have $500,000 that they're managing. So that means you have to have $500,000 liquid for them to manage in order to work with a dedicated CFP. And they also charge 89 basis points. So it's significantly more expensive. Um, And then, I'd say the last is there are some independent advisors out there that are focusing on the mass affluent. They charge a subscription fee or a flat fee, and they do full financial planning. Um, that's a hard model to scale as an independent advisor without a big sort of backbone of technology and innovation. So, like I said, there's a lot of people that are doing bits and pieces, but I think we're one of the only ones that's really put it together in the way that we have.
And so you touched on this a little bit, the fact that you were virtual, and I read that 80% of your company was virtual prior to the pandemic. So tell me the advantages of being virtual when it seems like you'll be uniquely positioned, given that your CFPs will be virtual.
So I think there's three big things for us. There's service model and client experience. There's cost, and then there's ability to attract talent. And so, from a service standpoint, being virtual allows us to meet the clients where they are. So, in the old model, you had to get in your car, drive to your advisor's office. They worked Monday through Friday, 9 to 5. So, you had to interrupt your own workday to go and see your advisor. And that was fairly inconvenient. Now we do a lot of night and weekend meetings. If someone has an hour at 10 a.m., they can log on and talk to their advisor. It's way more flexible. So hands down, better client experience. It also means that we can match our clients with advisors that actually meet their needs. So, for example, if you're a client who's going through a divorce, we have advisors who specialize in helping clients figure out what to do with their finances when they're getting divorced. So, I think in the old world, advisors were predominantly differentiated themselves based on geography. I'm 20 miles away from you or 10 miles away from you, so therefore you should work with me. In the new world, we can match a person to an advisor based on what they actually need. So I think that's number one. Number two is around cost. People working from home really reduces your office footprint, and we spend a fair amount of money in getting people together, or we have, and we will start again as soon as it's everyone's comfortable traveling and doing in person things. We spend a fair amount of money getting people together to team build and do cultural things, and also make sure that we're collaborating the way that we should, that you can only do on an in-person standpoint. Um, but we save a huge amount of money in overhead. And then last is just the talent pool. There are about 80,000 CFPs, maybe 90,000 at this point in the country. So it's a lot, but it's not a huge amount. And rather than say, okay, we're gonna pick a spot and be constrained to one geographical footprint, we can now hire talent wherever it is. And especially in the last years, we've seen a huge migration away from big cities and metro areas. And, we have planners that are sitting in the Dakotas or sitting in Montana and have decided to, move to the lake house in Michigan full time. And, we're one of the few companies that can actually provide them a job, and they can continue to do a great job for us.
And so let's talk a little bit about your fundraising. You've Warburg Pincus was in both the Series A and the Series B. What intrigued them about your business model?
As I said, Warburg's been a great partner. It's a very non-obvious partner for a company at our stage. They did our Series A when we were almost pre-revenue, and they continued for the Series B. I think they have a lot of experience investing in companies that have tried to do financial planning for the quote unquote mass affluent. They were in the mutual fund store, then they were in financial engines, and so they had developed a thesis around the future of financial planning and wealth management for the mass affluent. And when they heard about us, they were like, "Wow, you guys are doing exactly what we think is the future." And so they actually kind of knocked on our door and said, "Hey, we want to get involved." We were in a fortunate position. We'd raised a $4 million seed round at that point, so we weren't we weren't in need of money. So we were able to sort of say, well, if you want to get out ahead of this of our fundraising process, that's fine. But you kind of have to give us credit for where we're going to be when we actually are going to start kicking off a process. And they were willing to do that. Um, and they've been a great partner ever since. So, I think like backing up and sort of zooming out from our specific story, finding finding a partner who has a common belief and a common thesis in your mission and what you're trying to do is so incredibly important. We've been very fortunate that there really hasn't been any misalignment in terms of what we, as the entrepreneurs and the management, and they, as the investors, see as the end goal and the end opportunity.
So tell us about your growth strategies. Obviously, you're probably different from most RIAs that are out there acquiring assets under management. So yeah, will it be primarily internal growth? Is there potential acquisitions on the horizon?
For us right now, our organic growth is strong enough that it will carry us through to, for the next several years and, likely to the point where we'd be in a position to IPO. So, so we're focusing all of our growth resources on organic growth, both in the D2C business, and then also, as I mentioned before, we'll start down the path with in the employer channel as well. Um, I would say never from an acquisition standpoint. Certainly, it's a great way to get talent. It's a great way to add capabilities. We don't have a pipeline of active deals that we're working on now, but as we grow and the market evolves, I do think stepping back, there's going to be a lot of consolidation in the fintech and wealth tech markets in the next few years. There have been a lot of companies that have gotten funded, and there's a pretty clear distribution of those that are making it and those that are not. And some of the ones that aren't actually have great products that they've built, but distribution in financial services is always the hardest thing. And so, so I would imagine that putting us aside, there will be a fair amount of consolidation and M&A that happens in the market in the next few years.
Well, Anders, I want to thank you for sharing your vision for your future. It's very exciting. And when you're back in Baltimore, let's touch base.
For sure. Thank you very much for the time, Edwin.